Now, as India's central bank gears up to announce its monetary policy, all eyes are on the impact of US import tariffs and the steps that RBI Governor Sanjay Malhotra will take to bolster a slowing economy. With the US set to impose tariffs of up to 26% on Indian exports, the RBI's response to this challenge is crucial. Will the central bank's actions trigger a positive market response, or will it only deepen the global economic anxiety? Most economists expect a 25 basis point cut in the benchmark repurchase rate, bringing it to 6% as India grapples with slower growth. However, some predict that the RBI could go even further with a 35 basis point cut or change its stance to accommodative, signaling a more growth-friendly approach. With the economy expanding at just 6.5% last year, the weakest growth since the pandemic, the tariff hikes could be the tipping point. The tariff impact is expected to drag India's growth by as much as 20 to 40 basis points. Global banks like Goldman Sachs have already revised their 2025 growth forecast for India, now predicting a more modest 6.1%, down from 6.3%. Will the RBI's rate cuts be enough to offset the potential loss in exports and restore investor confidence? Now, the RBI has already taken aggressive measures under Malhotra's leadership, including cutting rates for the first time in 5 years and injecting more than $80 billion into the banking system. But with markets reacting nervously, stocks down, rupee falling and bond yields rising, will Malhotra's strategy be enough to calm volatility? Can the RBI's policy shift Can it revive domestic demand and spark a positive response in global markets? All right, for more on this, I'm now being joined by Ms. Mitali Nikor. She's an economist and founder of Nikor Associates, joining me live from New Delhi. Mitali, thanks so much for joining us on the broadcast. Let's start straight away. The RBI is, of course, set to cut rates to a 3-year low. This is going to be of 6%. Would that be enough to revive India's growth momentum, which it has been hit since a while? And this is in the midst of all these tariffs coming in as well. How do you see this one going forward?
So I think it's quite a conundrum for the RBI. So, thank you so much for having me on your show. And, today, at this point in time, if you think about it, the Federal Reserve, for example, the US Federal Reserve, is also in a massive conundrum because they realize that what they'll be facing is a situation of stagflation, right? We'll be seeing massive amounts of, recessionary fears in the US. We also see prices rising already, and the cost of living in the US is only set to go up, up, and up. In such a situation, the traditional route that a US Fed would take would be to actually raise interest rates to control inflation, but because of the recessionary fears, their hands are tied. Now, in the Indian context, when you contrast this, our inflationary, trends are actually quite okay. At this point in time, we've seen a huge stability when it comes to inflation. In fact, we're seeing reduction in inflation in the last 3 or 4 quarters. So therefore, the RBI now can actually take an accommodative monetary policy stance and go ahead and cut rates. But will it be enough to say counter a massive man-made US recession? I'm not quite sure, because this kind of recession that may be coming into the US and then cascades down into emerging economies, particularly an economy like India, where the IT sector is so dependent on US consumption, it really remains to be seen if a 25 basis point cut will be enough for that.
Understood. Going forward, Mitali, the nascent recovery that we're seeing in Indian stocks, do you feel RBI's actions will boost that enough to offset the impact that tariffs are expected to have?
So again, honestly, for the RBI, it's a matter to think, because today, the full impact of the tariffs is not being felt. I mean, the tariffs are going to come into effect literally today, 9th of April. And we'll see the full effect of tariffs coming in about 1 month or 2 months' time, when, the actual price rises and inflation and cascading effect of inflation starts hitting the US economy. So in my view, at some point, the RBI may also think, okay, we'll do 0.25 now, definitely to deal with the immediate fallout, but we have to be prepared for even up to a total of 1% reduction in interest rates, keeping everything else constant if inflation doesn't, go through the roof. just so that, we would be able to deal with the longer term fallout of the tariffs. So at this point in time, the RBI needs all tools in its arsenal, because this tariff war is going to be protracted, it's going to be long, and we don't know which all sectors it will finally end up impacting, because the tariffs are so broad based and apply to all countries and to most sectors.
I hear you. At this point, Mitali, the RBI is set to cut rates to a 3-year low of 6%. Do you think the RBI can be more unconventional in this sense and deliver a larger rate cut?
Well, I would say that it's not a good idea to do a larger rate cut at this point, because, as I said, we need all tools to be in our arsenal, but we don't want to fire them too quickly. We need a situation where maybe 2 months down the line or 3 months down the line, we have to do an aggressive rate cut. And it's important that, we don't do the aggressive rate cut today. In fact, I would go so far as to say that if the RBI believes that, at this point in time, the economy is in a kind of a stable path, they may even decide not to cut rates and say we'll cut rates after 2 months or after 3 months, once we start to feel the full effect of the tariff. So they may even go with that decision. But I think it's more likely that they will do a small rate cut of 0.25 now, which is what has been planned and is important to sort of combat the immediate fallout. And then again, keep on doing these rate cuts of maybe up to 1% through the year, because at this point in time, we need all tools in our arsenal, to be there.
I get your point. That was Mitali Nikor joining us from New Delhi. Always a pleasure speaking with you, Mitali.
Thank you.